My name is Neeraj Chitalia and I have been an investor in the stock market for the past 20 years. The purpose of my video is to help newcomers understand the basics of investing in the stock market and become successful in trading and investment. So what I'm going to do now is take a call of a person who wants to start investing in the stock market and I'll help him understand the basics of investments. So here we begin. Hello.
Hey, hi Neeraj, good evening. How are you doing?
Hey, I'm good, Ishaan. How are you?
I'm doing good. Just been thinking of getting into share markets
Oh,
and
wow.
stocks, So
That's
as
amazing.
yeah, I was just thinking because now as we being into wedding photography and obviously the current scenario is coming up. The lockdown period is slowly and it's generating more. So I was just thinking to invest some capital in stock market, but the problem is I'm absolutely a newbie in this industry,
Okay.
and so I thought it would be a great idea to call you up and to ask
Okay.
like how and from where should I go about, and yeah, so I would just need to know something about it.
Sure. Wonderful. So great to hear that you are keen and interested to learn in the first place before investing in the
Mm-hmm.
stock market. That's a great thing. And before starting to invest, I would like to know a little bit as to
Mm-hmm.
what have you been already doing? Do you already have been investing? Have you kind of done some bit of investing, some
Mm-hmm.
bit of study, some bit of research? What is it that you've already done?
Yeah, so I've been investing like my some of my capital in fixed deposits, absolutely,
Okay.
and I've just bought some gold as well. But my major investments is only fixed deposit.
Okay.
But I've been seeing like last year the fixed deposit interest of rate were 7.3 to 7.5, but right now it's drastically got down to like 5%.
Right.
So I was a bit worried, obviously, like and I thought to just like pull up some of my funds and to invest somewhere, but I'm absolutely clueless, where should I? And like knowing and seeing, people around, like they've been doing stock market, share markets, and I've been having no idea in this. So if you could just like like help me out, like how should I start about on this?
Sure. So very good to know that you understood the basics of being safe in the first place. That is the reason you have safely invested your capital in the fixed deposit, which is a good thing. And now you want to enter into a stock market. So for anybody who wants to invest in the stock market, my very first question to that person is, what is your objective behind entering the stock market? That is the first thing you got to be clear about. So maybe somebody
Okay.
wants to fund a wedding which is going to come up in the family, or they want to buy a new house 5 years down the line or 10 years down the line, and that's the reason they are saving up and they are also investing. Or there could be some other reason, like, okay, I want to have some retirement savings for maybe 20 years down the line. I want to retire, and that's the reason I am trying to earn and trying to build a wealth and save. So these are the various objectives which people have, and I assume you are in your early 30s, I believe, right?
Absolutely, yes.
Correct. So, my advice to people of your age group is that you must divide your capital in such a way that you do not put all your eggs into one basket. So, you should not put all of your money that is your saving entirely into stock markets, or you should not put all your money in something which is like a fixed deposit fund, which is not going to grow that much. Such that it can beat the inflation and the expenses which are going to grow over time. So it might not help you build that kind of a wealth objective that you are looking forward to. So let's just say you already have 5 lakhs in your bank right now and you want to start investing. uh, so the first thing you need to do is allot 25 to 30% of that capital to go into
Mm-hmm.
equities or stock markets. That's the first place to start. Um,
Perfect.
and the remaining portion has to be divided into safe investments like fixed deposits or post office investments, and you can also put some money into gold bonds, and there are a lot of Reserve Bank of India bonds as well in which you can invest as a safe investment option. So this is how you have a mixed bag of investment, and you can have slow and steady entry into the stock market in a staggered way. So let's just say you have decided that okay, you're going to put out of your 5 lakhs, you're going to put 1.5 lakh into the stock market. Now for that 1.5 lakh, you should be going in a staggered way. So you may want to invest 25 to 30,000 at one time, not all the money in one go. So that is my first advice that I can give you.
So, for example, if I already have some amount, in fixed deposits as well. So, do you think, in case if I have a lakh rupee in my fixed deposit, in case if I'm getting the interest of it, like for example, a 6 to 7,000 rupees yearly, so at
Yes.
least I can plan to invest that amount, the interest which I'm getting from the fixed deposits, like smaller portion of amount into stock and share market.
There is something called as compounding, so you can always reinvest that money again into your fixed deposit. So that money you should not touch, you should always let it grow and keep reinvesting that money in the fixed deposit. And you can always have a certain capital like 1.5 lakh which you only want to invest in equities and stock market, which could be a direct investment, like you directly go up front and buy stocks as per your research. Or what you can do is go by the mutual fund route, which is also a better way to invest for people who do not know too much about stock markets. So there are a lot of mutual funds which you can choose. There are equity based mutual funds, and there are a lot of debt funds, and there are large cap funds, and there are small cap and mid cap funds. These are the funds which you need to research and invest your money in such a way that you do not get directly invested into the stock market. And if at all there is a huge movement or a large movement, you do not take a big loss at one go. So mutual funds are kind of safer, though they invest in the stock market, but they're kind of safer. They will not give you so much of a return, but that is still a better return compared to your fixed deposit. For example, a fixed deposit may give you 5.5% at this time. A mutual fund investment can give you somewhere close to 8 to 12% in a year. So in a way that is better. And if you invest yourself in the stock market, then basis your research, if you have entered into a particular stock at the right time and exit at the right time, you can make anywhere from 20% to 30% in a short span of time, like 3 to 6 months also.
Oh, that's great, Niraj. I really need to now start
Right.
investing in shares
Right.
and stock markets.
Right.
That's a great thing as well.
Yeah.
And yeah, thank you so much because it was quite informative.
You're welcome.
And yeah, that is it.
Great. So nice talking to you, Ishaan, and wish you all the best with your investments and your future.
Absolutely.
Yeah. Thank you.
Thank you so much.
Okay. So I hope you guys learned something out of this conversation, and you must have got some insight on how to go about and start your journey into investing in the stock markets. If you really like my videos, please like, comment, and share my videos such that other people can also benefit out of the knowledge which I wish to share. Thank you.